Good evening. Ira Epstein with your financial market wrap-up. And this particular wrap-up is for Monday, the 14th of November, 2022 at 6:20 p.m. Central Time. Now, before I get going, let me remind you, I have a special currency report that is up. It goes off sometime tomorrow. I think in the evening is when it's actually going to go off. But it won't be up after that. It's only good for 72 hours. Well, it's not hours. I keep it up for 3 business days. So somewhere between Tuesday and Wednesday, it's off, but I'm not going to talk about it other than today. I cover in detail the weekly charts, the daily charts, the seasonality of the market. I look at the 30, the 15, and the 5-year, what it's done historically, and our price count, our proprietary data to give us an idea where this market is headed. Needless to say, a top of sorts is in. How deep does the market go becomes a big question. If you haven't looked at it, you can do so by just following my finger up here, move your cursor there and give it a click. That's one way to look at the market. Okay, you'll be able to get in that way. Now, this Thursday, I'm going to hold a live webinar at 12:30 p.m. Central Time to cover futures market, stocks, ETFs, spiders. So that's what we'll cover. In order to register for that, I sent an email to you if you're on my mailing list. You might want to check your spam, your junk mail to see if you're there. You should know if you're on the list or not. If you're not, tomorrow I'll tell you in this how you can join that. So where we're at in the market, I think, is interesting. I had 2 Fed members come out over the weekend and definitely do and say what I've been thinking. Number one, even Bloomberg asked me today, and I did a piece for them about this. Did we pivot? Are we pivoting? That's the first thing Bloomberg wanted to know from me. And what I said very clearly was this. It depends on your definition of a pivot. If you consider moving from 75 basis point hikes to 50, that's a pivot. Okay, I am not in that camp. To me, the pivot is when the Fed stops raising interest rates. The pivot was what? Staying at 0, starting to move rates higher. The speed that they move, to me, is not a pivot. That is, are they increasing, decreasing based on the data, waiting on the lag time, and so on. Ms. Brainerd, the federal chair, she was talking about that today, and that's just what she said. She said it's encouraging that we saw the economic data from the CPI last week weaken in both. This is very important, the core, the headline, and she's looking at PCE very hard. And then, of course, the jobs, they want to see weakening in the jobs market. It certainly helps her cause that Amazon today announced another 10,000 layoffs. So who isn't laying off in what we'll call the tech sector? You see it literally everywhere. It's the brick and mortar stores that are hiring right now for the holiday season, but the tech are not. And I'm not hearing the tech is hiring in any manner. And I'm not hearing the massive hikes that they used to do for FedEx, for UPS, and so on for the holiday season. Yes, they're hiring there, but not the way they did before. That's what I'm noticing. So the markets are expecting a bit of softness right now. So that's one of the things that I think you have to look at, and what does it mean? So I'm of the camp, and I said it over the weekend, I'm going to repeat it, that we're probably at the numbers, unless they flare up again, of 50 and 25 point hikes. The question will be, as we get into 2023, how many of them do they go out to? In other words, how many of the meetings do they go before they can say they can take their foot off the pedal and not hike at all? I don't think anybody has the answer to that just yet. And remember, each hike hurts the economy. That's the goal. The goal isn't to spur it on. Now, their guess is, where does inflation drop and interest rates go up and you don't cause a deep recession? Recession coming? I think you're in one. I've been saying that. And now seeing all these layoffs, I'm convinced I'm in the right camp. As you can see, the battleground right now is the 18-week average of closes at 39.26. When we come over to the daily chart, I'm looking for some consolidation. This market had a phenomenal pop to the upside. There's a problem with the pop in that what's leading the parade has been the Dow. I don't like when the Dow leads the parade. I want to see the bigger indexes lead the parade. The Dow's been the strongest. Not saying these didn't come up nice. They did. The trend is up, higher lows, higher highs. The market, as you can see, got through and didn't even pay attention, in all fairness, to the 100-day average. It did back here. And then it fell back to the 18. But this time, once it cleared it, it didn't have the power to get up to the 200-day average. And that's a number that a lot of people want to see it go to. You will hear over and over, oh, the test of the 200-day, that'll be it, the 4,100 level. I'm looking for the resistance to be there. Many of the analysts are coming out now with their 2023 guesses as to what the market will be. 3,900 seems to be a number they're coming up with when, for all purposes, we're there. So are they looking for a flat market? Well, you know you never get that. I don't care where it settles next year, but that's picking the lottery, right? Same thing. How do you know what's going to go on? Talk like that's a little, to me, it's useless. It gets you maybe on TV for 5 minutes. And then if you're wrong, you're never invited back. Unless you're always wrong, then they want you back because contrarians love you. You're fighting at the upper Bollinger Band, didn't make it yet to the 200 week. I don't know if there's any data points coming out now that will do that. So that gets very interesting in the market. Momentum-wise, you're overbought as can be. When we come over to the NASDAQ, you're up to the upper band. That's a resistance point for me, and you're overbought as can be. It's this market that's been the strongest because it has the embedded reading. And for those of you that have taken my enhanced Bollinger Band course, you understand that if the red line closes under 79, when it happens, I will then tell you I am looking for price and this number to get together. But something else is happening that is bullish. And today what's occurring is the 18-day moving average got over the 200. That's a bullish crossover. That's bullish, period, okay? It's the chart that's done it. When we go to the others, you're on the verge of it in the Russell. Look at this. You've got this market coming up with the 100. It crossed. Now, the 200's far away. Obviously, the one that I like the best is the longer-term averages when you cross that. But I don't like it in this index because it's only 30 stocks. So which 30? Well, the defensive plays, okay? That's really how you got to look at it as to what it is. When we come to the VIX, if you got to that lower band, I was looking for the pros to write puts, looking for the market to get back up here. But there is an event happening. You just had a bearish crossover where the 18-day average got underneath the 200, and it's ready to go under the 1. Now, that would give you a classic bearish setup, which is bullish stock market. Why? You'd have the 18-day average on the bottom, then the 100, then the 2. Moving average people will tell you that's a classic bearish setup if it occurs. When we take a look at the bonds, the market's not fighting to make higher yields. It's fighting against it. It's coming up through here. There's your battleground. So have we seen a peak in the 30, the 20, and the 10 years? That's going to be the argument. Where people think the Fed will have the most play is going to be the 6-month, the 1 year, and the 2-year yields. So I'd be watching that very, very hard if they're right. If you take a look at the 10-year notes coming up here, resistance up here, but both the bonds and the notes have good support numbers, in theory, against their 18-day average of closes. In the dollar index, if you're dropping yields, why wouldn't the dollar slip right here? It makes sense. That helps the whole world economy, by the way. And you've latched onto it over the past 3 days. If you can keep latching onto it, you might be able to get down to the 104.44 area. You want to look at my currency report. It's on the website under research as well. And of course, I just showed you how you can get to it at any point. Just move your cursor over the top here. You'll see an icon and you can give it a click to get there. And obviously, if I'm bearish the dollar, I'm thinking this market's still fighting at the upper band, which it is. Now, will it embed becomes another question, but we're not there yet. In the British pound, the way I teach charting, I'd stay away. Today's the 14th. We're going to see what they come up with by the 17th, and I'm talking they being the Prime Minister and the Chancellor of the Exchequer. And did they do the right thing? How does the market view it? What do they think? I don't know what the plan is. You don't know what it is. Let's see what they come up with and how the market looks at it. but the market's giving them the benefit of the doubt with the rally. Remember, this market under mistrust was over here. This got her to lose being prime minister. Now the market has come all the way back up. This got Mr. Sunak his job. It's exactly what happened. In Bitcoin, I want you to think of this as cowboy land still. You'll hear a lot of talk as people say, well, look at Binance is going to come out now, and what they're going to do is they're going to create a fund for recovering lost tokens. It's not enough. It's their fund for their tokens. What about the whole industry with this? In the old days of trading at the exchanges, commodity exchanges don't have the insurance in accounts the way that you have in your stock account. If you trade a stock account and trade futures, the money comes out of that and it's never been insured. There's no problems. At the beginning, how this all played out was the exchange itself would guarantee the money. All the members that owned it before it was public, they were liable for debits collectively. Well, maybe that's something along that line, or there's an alliance that forms and everybody says, hey, if you've got $1 billion in assets, 10% of whatever your capital has to go in there to protect 20%, whatever the number is. You're going to have to create something like that. In addition, regulators must get involved. It is time to call an end to this nonsense, okay, on our shores. I don't care what happens elsewhere. In America, lock it down. It's time. And I don't know why the regulators are taking so long. When they think they've got somebody on the hook, they go like that. I've been at this game 50 years. I think you got somebody on the hook. I think we're all asking you to do that. It's time. Not saying shut the industry down. Not at all. I'm saying clean it up. Very big difference. And it needs cleaning up. There's always a hack. There's always money being lost. There's always a firm that looks great and it isn't so great. And people are losing billions collectively. It's time. Okay. When you come over to the Brent versus WTI, you're still hanging over this. That means the market's still looking good. Now, OPEC today came out on their monthly report and revised downward the demand that they're seeing. Code word, they're thinking cuts. Their job is to balance the market in their eyes. That's what they're looking at. So on these breaks, just remember, probably the next word you hear is going to be, where's the production cuts? Unfortunately, today's November 14th. The next OPEC meeting, I think, is around the 4th of December. So that would be about a couple of days in front of it that you really get the information. Are they going to go 100,000, 300,000 barrels? I don't think they're going to sit tight if they're already saying demand is falling. And they gave all the reasons, the slowing of economies, the raising of interest rates, all the right characteristics. You're holding support. You've worked your way back into it at the 200, the 18, and the 100 day, but the trend is down. If you clear this low, you could drop back to the 90 level, about $2.50 lower. In the WTI, you're under all the key averages. You can go back to the lower band. You're already oversold. I'm not thinking you're going to attract new selling. You could. Resistance now is right above the market in the $87 area. In the heating oil, Chicago. We're going to get 5 inches of snow in our suburbs tomorrow. Not in the center of cornland, right outside of the city. The city might get 1 to 2 inches. I'm ready. I've got my salt ready to go. But November 15th is a very early day to get this snow. That's the thing that we'll be looking at. When you live by the lake, as I do, and where the Board of Trade and all this is, the water there is still 50 degrees. So you don't quite get the accumulation as you move into the suburbs of the city. And there you don't get the lake effect of the warmth. And that's the amazing thing. The lake helps you in the summertime. It cools things down. And in the wintertime, it keeps the heat. But if we drop from here, it's down here. Now, natural gas has got a different play going that's negative. Freeport, the LNG terminal over there, it doesn't look to me like it's going to be ready this year at all. I was reading reports today. They haven't even filed with the necessary commissions the paperwork to get reopened, let alone finish up work according to what the commissions will say. So it's looking to me more and more that that's a miss. Now, you had pretty wild action today, actually, in the market. It went up on the cold spell news. So when you take a look and you come over to the Monday range, you can see you had a 50-cent range in the market. It gave that up late in the afternoon as the market started getting this news from them, and that's when things sold off. So it's holding the 18-day average, but the trend is down, lower highs, or is it? I believe you've got lower lows here, but you're staying over the 18-day average. You're playing when will Freeport open, and it's beginning to look like it might not be December at all. Think about it. If they haven't done the paperwork, you're going to be running into, and I was reading this, you're going to run into the holiday season. Key people go away on vacation. You know that's the case. They said it takes 3 to 4 weeks to go through the paperwork, do the due diligence before the permits can be given. And I don't know if those permits are for minimal amount of export or just work. It's confusing, but it doesn't sound like anything positive is happening quite at this point in time. So I think you just watch it and don't assume that you're going to get that export out of it, which is a negative. Now you got to just play the weather part of it. So with that, I'm Ira Epstein. I thank you for listening, watching. If you like this, give me a thumbs up. And I will hope to see you all come Thursday. Again, tomorrow I'll show you how you can get there if you didn't get an email from me so you can join in on the webinar, 12:30 p.m. Thursday, Central Time. You have a good one.